Today's financial market update. The most important market insights you need to know. Market sentiment is bullish, mild. Market is performing well across major indices. Index performance: S&P 500 at plus 0.86%, Dow Jones at 0.56%, NASDAQ at plus 1.34%, Russell 2000 at 1.07%. The stock market sentiment remains bullish, with notable gains in technology and infrastructure sectors despite recession fears. The bullish sentiment suggests that investors are optimistic about the long-term growth potential, especially in technology and infrastructure markets. Consider allocating funds towards technology and infrastructure sectors, which are likely to benefit from sustained investment interest and growth opportunities. Oil prices have surged above $110 per barrel, raising significant concerns about inflation across various sectors. Rising oil prices are likely to drive inflation higher, leading consumers to tighten their spending habits and impacting economic growth. Consider reallocating portions of your portfolio into energy stocks, which may benefit from sustained higher oil prices and increased demand. Realty Income posted an EPS of $1.08 with revenue of $1.40 billion, aligning perfectly with market expectations. Realty Income's performance suggests stability, which may reassure investors amidst broader concerns about future growth and market volatility. Consider investing in Realty Income for stable income generation, as its consistent performance may attract yield-seeking investors in uncertain times. Consumer confidence is declining as recession fears increase, impacting overall economic stability and spending habits. Declining consumer sentiment indicates that households may cut back on discretionary spending, leading to slower economic growth. Consider reallocating funds into defensive sectors such as utilities and consumer staples, which tend to perform better during economic downturns. The effective federal funds rate peaked at 4.33% from May to August 2025, indicating a prior tightening phase. The decline in the federal funds rate suggests the Fed is prioritizing economic growth, which typically favors risk assets like equities. Consider increasing allocations to growth-oriented equities, particularly in sectors poised to benefit from lower borrowing costs. Prediction markets indicate a 25% chance of recession in the U.S. economy within the next year, signaling potential downturn risks. The growing likelihood of recession reflects investor anxiety, suggesting that market volatility may increase as economic indicators worsen. Consider diversifying into defensive stocks, such as utilities or consumer staples, which tend to perform better during economic downturns. Oil prices have risen above $10 per barrel, driven by escalating tensions from the Iran conflict. The surge in oil prices indicates potential inflationary pressures, which could dampen consumer spending and slow economic growth. Consider allocating capital to energy stocks, as they may benefit from rising oil prices and increased demand for energy resources. U.S. recession fears are escalating, leading to heightened volatility in the currency market. The increasing likelihood of a recession suggests that investors may prioritizing safe haven assets, impacting currency valuations significantly. Consider diversifying into safe haven currencies like the USD and Swiss franc to mitigate potential risks from currency volatility. Tensions are escalating between the US and Iran, with military posturing increasing near the Strait of Hormuz, a critical oil transit route. The rising tensions indicate a potential for increased oil prices, which may lead to inflationary pressures affecting consumer spending and investment returns. Consider investing in energy stocks or ETFs that could benefit from rising oil prices due to supply disruptions in the Middle East. Oil prices have surged, surpassing $110 per barrel due to escalating tensions related to the Iran conflict. Rising oil prices often signal inflationary pressures, which can lead to increased costs across various sectors, affecting overall market performance. Consider diversifying into energy stocks, particularly those with strong balance sheets, as they may benefit from rising oil prices. Rising oil prices have reached levels near $100 barrel, significantly impacting global markets and inflation rates. The surge in oil prices suggests higher production costs, which could lead to increased inflation and reduced consumer spending in China. Consider diversifying portfolios with energy stocks that may benefit from rising oil prices, but remain cautious about overall market volatility. Oil prices have surged to over $110 per barrel, creating significant volatility in the bond markets. The increase in oil prices usually leads to higher inflation, which can erode the purchasing power of fixed income returns. Consider diversifying into inflation-protected securities, such as TIPS, to safeguard against rising prices linked to oil hikes. UBS has increased Essential Properties Realty Trust's EPRT price target to $40, indicating a potential 17.9% upside. The price target increases from UBS suggest that these REITs are positioned well for future growth amid market volatility. Consider adding EPRT to your portfolio, as its projected upside and stable dividend yield present a compelling investment opportunity. Oil prices have surged to over $110 per barrel, significantly impacting global economic stability and investment strategies. The rise in oil prices may lead to higher operational costs for companies, potentially squeezing profit margins and affecting valuations. Consider energy-focused investments, as rising oil prices may offer opportunities in oil and gas sectors despite overall market volatility. AMD shares increased by 2.7% following the launch of its Ryzen AI embedded P100 processors aimed at edge AI applications. The rise in AMD's stock reflects investor optimism about its innovative AI products, indicating strong market demand for edge AI technologies. Consider adding AMD to your portfolio, as its advancements in AI technology may lead to sustained growth and increased market share. Oil prices have surged above $110 per barrel, reflecting heightened geopolitical tensions affecting global markets. The surge in oil prices acts as an economic barometer, signaling increased inflationary pressures that could heighten market volatility for crypto assets. Monitor oil price trends closely and consider hedging strategies to mitigate potential risks associated with Bitcoin investments during volatile periods. Oil prices have surged over $110 per barrel, driven primarily by escalating tensions in the Middle East. The rise in oil prices may lead to decreased corporate profit expectations, prompting investors to reassess their portfolios. Consider diversifying your portfolio by increasing allocations to green energy stocks that may benefit from long-term demand for alternative energy sources. Thank you for watching FERPA, your financial Sherpa.